Hello everyone, welcome to this afternoon's panel, and we are going to talk about a very exciting topic about venture investing in Web3 across different regions. And we are super excited to have all our speakers today. But before we pass the stage to the speakers, I'm going to do a brief self-intro. My name is Sophia, I'm the moderator for today. And I run a venture fund called GSG Ventures. And maybe all the speakers, we can do a round of self-intro and tell us more about who you are, what you do, and what is your focus of your investment, and maybe like where your LPs are mostly based. Maybe we start from Shawn.
Thanks, Sophia. So I'm Shawn. I'm a general partner at Trive Digital, where we focus on early stage investments in Web3 and AI. We are pretty active. I think we do 1 or 2 deals a month. And we have deployed currently in North America, Europe, East Asia, Southeast Asia, and also the Middle East. In terms of LP demographic, I think most of our LPs are predominantly based in Southeast Asia. They're family offices or prominent families in Southeast Asia. So yeah, thanks.
Hi, I'm Ciara, I'm founder and managing partner of C-Square Ventures. Very happy to be back at TEAMZ. We come here every year and it's a great conference. A little bit background of C-Square Ventures. We are a early stage Web3 investment firm, and we are quite global. I personally am based in Singapore. We have team members across the States, Hong Kong, and we invest globally into early stage projects, and we aim to provide not just capital but also operational expertise to help them with token go-to-market, especially when it comes to Asia. And my background prior to fund C-Square Ventures, I was at Tobias for a few years. I built out the BD and partnership team there, also was head of listing and investment and global user growth and institutional business unit. And in terms of LP base, our LPs are quite decentralized as well. We have Google from the States, we have some public listed companies from Korea, Hanwha, and some in Hong Kong, and a lot of my past portfolio companies like Polygon, Avalanche, Allfriend, and some market makers like GSR, Nortad, and Quinnos. It's quite global. Thank you.
Lloyd?
Yeah, nice to meet you all. My name is Lloyd. I'm the founder and CEO of Hyperithm. And Hyperithm is a crypto asset manager that I founded in January 2018. I'm based in Japan. I moved to Japan in 2017 initially to work for a family office, and ended up going down through the crypto rabbit hole during 2017, and then founded Hyperithm the year after. So currently we have 2 funds. One is the hedge fund, the other is the venture fund. Hedge fund is more liquid, arbitrage focused, and we've been running it since 2018, so since foundation. The venture fund, on the other hand, was launched 3 years ago, targeting Web3, mostly token deals outside of Japan. We've invested around 50 projects so far, mostly seed, pre-seed, pre-series A deals. And most of our LPs are high net worth individuals, family offices, corporate treasury, some publicly listed companies from Japan and Korea. We have a growing number of investors from Bangkok right now, Bangkok, Thailand. Very nice to meet you all. Actually, this is my, I think, 3rd time speaking in TEAMZ. And I'm glad to see the event and the conference is growing each year. Thank you.
Toby?
Yeah, thanks so much for coming, first of all, and attending TEAMZ. We're big supporter here. I love what these guys are doing. It's awesome to see it's growing every year. And I'm based out of Singapore. We run TBV, which is a venture fund. Previously, me and 2 other partners, we launched Blockchain Founders Fund. We invested in something like 160, 170 companies, and now with the new fund, we have increased the check sizes a little bit, so we're now kind of focusing on investing at least $500,000 up to $2 million in like typically seed stage companies. We've done 23 investments now with TDV across different verticals, and the team is predominantly based between Singapore and the US, and also just kind of like Southeast Asia, Asia, as well as the US are kind of the two big markets we're focusing on. And from an LP perspective, it's predominantly Asia, and then we have a few outliers in the US. It's a mix of family offices, listed companies, high net worth individuals, and crypto whales that are sometimes very, very helpful when it gets into supporting the companies launching tokens, but also just generally open a network to help some of the companies succeed.
Thank you. So I think most of us were also here last year at TEAMZ conference, and maybe Lloyd, I will start from you since we were also on the same panel last year. So obviously this year is very different from last year with all the macro environment changes and also with the market condition changes. So what has changed with your fund and what has changed with your investment focus, or what are the differences that you have seen this year compared to when we met here at TEAMZ conference last year?
Yeah, so I think for our end, given that we also run a hedge fund, which is, like I said, very liquid compared to the venture fund. The trend that I noticed from a lot of the investors is how to cope with the market where there's a huge uncertainty, also in the macro economy and also in the crypto market as well. So I'm pretty sure everyone's aware of the market movement in the past couple of weeks, just huge ups and downs, can't make you sleep. Throughout, because in Japan, the US is US working hours is midnight, so a lot of people just staying up all night, monitoring the market. But I guess that generally leads to investors more focused on liquidity. So what I noticed is a lot of the investors, they try to avoid very long-term investments because the market is moving crazy. They're just not comfortable with locking up their capital for a very long period of time. So even for fundraising for your VC fund, a trend that I notice is a lot of VC funds, they try to add a portion or a mandate where they can also manage their capital in a very liquid way. So for example, if there's a dry powder, we want to say allocate 60-70% of this capital for a liquid strategy. So it's sort of becoming like a hybrid, apart from where market makers used to be market makers, venture capitals used to be venture capitals. But everyone is sort of becoming, taking exposure into the liquid market is a very clear trend that I notice right now.
Very interesting. Maybe Toby, because you mentioned that you have team based out of Singapore and the US. Did you have any shift in terms of your investment focus from one region to another, given now we have the new administration in the US and the regulation has more clarity on certain sectors? Do you see such a change?
Yeah, we actually just spent, so me and my co-founder, we just spent about 6-7 weeks in the US. We traveled to all major hubs, I would say, or crypto hubs in the US. And overall, I think, a lot of people are very bullish about the US, but at the same time, everybody understands this is still quite some time away to have something formalized, right? And as a venture capital fund, you do have a deployment period, right? That's typically, let's say, 2 to 3 years where you sort of deploy your capital, and then you have, 3 to 4 years, 5 years, depending on the long, the fund lifetime, effectively. So you have to move, right? It's hard to sit here with $50 million or whatever in your bank account and not deploy because you're waiting for the US to change, or because that's idle capital that will negatively affect your fund down the road if you're not doing something with the capital. So although a lot of people are very bullish about the US, we understand it's a long time away. And I think, you just said it very, very nicely. It's very difficult to get people to lock up capital for 8 to 10 years, so it's typically the case for a venture fund. So yeah, in Web3, when some funds have exposure to tokens, where after the lockup period and stuff like this, you probably see some liquidity. It gets easier to convince people to support such an endeavor, but overall, a lot of LPs are very excited about hedge funds or just putting it directly into Bitcoin or other related assets that they understand and believe in, or go through big asset managers and go through the ETF side or whatever it is, depending obviously how deep and excited the LP is in the space, right? Because most of the family office is still allocating a very, very small portion of their overall capital into this asset class. So for them, it's kind of like, we'll try it out and see, and then we kind of go in a little bit of hedge funds, so we have the liquidity angle, we go into VC to maybe hit a home run. So like, coming back to the point of like, yes, a lot of venture funds are also now trying to kind of shift their thesis around and say, we can do liquid, we can do OTC, but it's not necessarily always what the investor wants, right? Because some larger profile investors, they are putting X amount of capital into a VC fund, and that's the risk they're buying, right? I'm buying the risk that my capital is locked up, but maybe I have the chance to get early in the deal, and that's doing really well. However, if you now sort of diluting their risk profile by buying Bitcoin or going into more liquid stuff, they might not always agree. But it really depends on like how big your LP is. If it's just an individual or family office, they might not have as strict risk parameters. But once you get into like the bigger companies that have a very strong portfolio allocation, it's hard to get very creative. But overall, in the US right now, as well as in Asia, most of the funds that are doing active deals that are bigger, they're not doing venture deals, right? They're all doing OTC deals. They buy them at a discount with a shorter lockup. And that's what's really like a big thing for investors, just because liquidity in the early stage market, especially when projects are TGEing, is dry, right? You have to have a big budget, you have to have a big community to now kind of make a dent in the community to successfully launch a token, and not so many companies are able to hit that point. However, we are a very long-term fund, so for us it's kind of like, now in this more bearish market, especially if this continues to be like that, I think it's a great market to invest because valuations are more reasonable, and overall it kind of really separates the builders from all the other noise that's in the market, especially the more and longer this continues. We've great success investing in the bear market in 2020 and 2021, especially after UST and FTX collapsed. That was a fantastic market if you as a fund already had capital.
Okay, Ciara, I have a question for you because I noticed that you have a very diverse portfolio. You have a few infrastructure investments, you have also applications. So do you notice any difference in terms of investment preference across different regions? For example, like, do you see more like infra deals from the US and more consumer application from the Asia? And why is that? And like maybe you can give us some example of your recent investment that actually reflects what you have observed.
Right. I think we definitely see more infrastructure from the States, especially from Silicon Valley, just like in terms of tech innovation, they've always been leading. And in terms of more like large-scale customer acquisition kind of deals, it's more in Asia, just like it's in our teams, right? Like running platforms or applications that can serve a very large amount of users, like like TikTok, like WeChat, all of the other exchanges, right? All of the crypto exchanges, big global ones, are Asia or like / Chinese founders. I think it's just like in terms of in detailed user operations, Asia have an edge there to provide better and customized services to their users. And recent investments, we've like you said, we invest in pretty much everything. We invest in gamings, applications, recent investments. Solar has been performing pretty well, and the reason we invested is just because we sit on a very large SOL position, so we need to figure out the best return there and find a very safe and trustworthy solution to get a good yield. And I think the founder is quite diverse as well, and they've been in the space for a long time, so we back them, and they've been killing it. We love the team, love what they've achieved. And I think in terms of geographic differences, this year we definitely spent more time in the States, right? Because of the new president, everything looks very optimistic in the States for crypto. SEC dropped all the cases, and then they have this strategic Bitcoin reserve starting with 200K Bitcoin. So it definitely makes more sense for us to spend more time in the States. And compared to last year at this time, remember it was when Hong Kong first approved retail exchange licenses, and everything looks very good in Asia. And Japan, I think, announced that they're gonna cut the tax rate for crypto. I guess this year they said they're gonna change it more to categorize it into like capital gain. But then there are questions about whether some already listed tokens meet the criteria for the new standards, right? So it just become a little bit unclear. But I think Asia is definitely going to catch up. And so given that, and crypto changes every other day, and every 3 months is a new market. So we just have to keep an eye out for all the different kinds of opportunities happening globally.
Thank you. And Shawn, I know that you spent your time between Asia and Europe mostly. So do you notice any differences between Asia and Europe? And maybe you can also share with us one example that you recently did in terms of your investment actually reflects your investment focus. And especially because you have your LP mostly concentrated in Southeast Asia, and that may also reflect your LP's preference.
So I think first of all, I think every fund or kind of investor would have a regional preference, but I think this regional preference would not really kind of be based out of not really based that much out of LP preferences, but more I think as a factor of what founders are building, right? And I think founders build because they build based on one, what they know, two, what they have within the confines of what they're allowed to do by law, right? And I think we've seen a lot of themes around this narrative. So for example, we have a lot of monetization of IP in markets like Japan, Korea, we have gaming in the Philippines, we have privacy in Europe, we have DeFi in the US. But I think these are more kind of the state of the way things are now. I think things are still in a constant state of flux. And as the Web3 economy matures, I think it's more of a global play rather than a regional one. And I think there's going to be a convergence at some point as narratives mature across all verticals, right? When certain markets pick up different narratives and they catch on and they mature, we will see more of these kind of themes sprouting in a lot of different geographies at the same time. Now, in terms of our investment, so we do have a few of these theses, right? But they're more kind of focused around fundamental themes. Like say for example, we did a deal that was trending around 2 months ago on Global FinTech News, and I think that was basically the company's called Mansa, right? What they do, they started off as a providing using liquidity pools to provide a revolving line of credit to remittance companies in Africa, right? They raised a large round, also backed by Tether, Polymorphic, and a number of the other guys. And at this point, they are expanding to support liquidity gaps in not just Africa, but in across cross-border payments in emerging markets. So they're expanding to Latin America, Southeast Asia, and I think this is just reflective of our thematic focus, right? Focus on core needs, right? Where the demand will be, again, built for the long term, right? Not just focus on what's hyped up or what's in trend, and we pump it, we avoid all the pump and dump kind of stuff, regardless of how trend-driven our LPs are, right? And I think that's our job as an investor and capital allocator to make some of these decisions, and I think that's the way that we think things will progress, going forward. So yeah, thanks.
Interesting. Okay, so we briefly talk about the differences across different regions in terms of the investment focus or preference. So, but as the regulation gets more clarity across different regions as well now, do you actually see how much do you think that regulation clarity is actually shaping the type of projects that are getting funded in your respective regions, or we are actually seeing the regional differences being doubling down, like we are still having this divide of different world? For example, do we see actually more institutional applications or stablecoin projects are being funded in all regions just because that just gained more regulation clarity? Maybe Ciara, you can start.
Right, I think one major change that we've seen because of the regulation changes, especially in the States, is that we see so many payment projects and stablecoin projects. We're joking that everyone's trying to launch their own stablecoin, right? That's why one trend. However, I think it's going to be very hard to make a stablecoin adopted by global markets, and you have to literally work with every single exchange out there to get to max liquidity, and that's one very important criteria for just screening for stablecoin projects. And I think one more is that because the SEC dropped a lot of the cases against major public chains, we've definitely seen those foundations and incubators from those public chains shift more of their power and resources back to the States. So for example, like Solana, right? They've been having their conferences in Lisbon, everywhere else but the States, but this year they're moving it back to New York. So that's one very strong indicator that they're putting back resources into the States. So I think it's definitely attracting more DeFi and other applications of builders from the States to keep building within those ecosystem. I think that's one more in terms of changes of products that we see. However, I think more generally is that right now, like everybody said, liquidity is drying up in altcoins. So it's very important for a project to have the ability to generate revenue and profits within this market right now for any token to survive. I think that's one major change that we've seen compared to the past few years.
Yeah, a lot of insights. Lloyd, what do you see there?
Yeah, so despite the market being very bearish at the moment, I think the regulatory outlook, especially for East Asia, especially for Japan and Korea, where we are based in, is very promising. Everybody, probably a lot of speakers before we spoke also spoke about the regulatory changes, tax changes, but also in Korea, they will allow institutional investors to invest in crypto from the second half of this year. So generally, I'm assuming more buy pressure from the investors, especially institutional investors from Japan and Korea. So if you are trying to raise funds, if you're running your own fund, if you're building a project, I think it's a great timing to start tapping to these investors because you might get their first check, right? Whereas if you are an investor already and you're trying to make investments, I think what Ciara mentioned is relevant. So projects in the States, because they are facing less regulations, alleviated regulations, they have more room to maneuver, they have more discretion and more confidence, right? And I think it matters a lot if you're building a project. So if I'm an investor, I would actually focus more on the projects that are building in the States. Yeah, I think we're out of time, so I'll pass the mic to Toby.
Yeah, maybe, okay, we will close up the panel with a fun question. Maybe just, with a hypothetical question. If I hand over $1 million to your fund today to be able to invest across different regions in the US, in Europe, in Asia, how are you gonna do the allocation and why? Start from Toby.
I would probably, So one thing to add here, right? I think it's very difficult to define because not a company is actually in the U.S., right? That's the first thing. They're all in Panama, they're in BVI, Cayman, UAE. Sure, their team might be sitting there. They might use this as the first go-to-market part. I mean, generally speaking, I would put everything in the U.S., right? And it's not just because it's also because the valuation discount a lot of the other projects have. It's the access to network. So if I only have $1 million, which is very, very limited capital, I'll probably start by investing in some of the key projects in the US, and I would spread it out between some more OTC deals of listed companies, and I would have a couple of deals that I have very early investments into, back them over the long time.
All right, Lloyd, a quick one. How are you going to allocate your 100 million?
Mostly the same, but I would try to specialize in RWA sector within the States. Yeah.
That's very.
I'll keep it short.
Ciara?
100 million?
What? 100 million. Sorry, did I say 1 million? 100 million. Yes, let's do 100
That's
million.
our average asset. I can do one deal, so 100 million. I think probably like 60% in Asia-based deals and then 40% in the West.
Shawn?
I think it's hard to it's hard to answer the question because if I were to invest in a European founder like based in the Middle East, based in Dubai, investing in operating in Africa, where am I really kind of investing in, right? So we adopt a global lens. I think we focus on main themes and key themes would really be kind of DeFi, AI, DePIN, and kind of stuff like that. So focusing more on general themes for a global market. Thanks.
All right, thank you. Let's give a round of applause again to all the speakers and their insights they shared today.
ありがとうございました。登壇者の皆様、ご登壇ください。